Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you're tuning in from. First of all, I'm very sorry for coming in a little bit late this morning, as I had some personal issues behind the scenes which I needed to sort it out before the live session began so that we do not have an interrupted session. So I'm glad we are back and back on live. Thank you for your patience. I really do appreciate it. So excited to welcome you all to another promising edition on the Forex Morning Mastery, our midweek review, as we intend to review how well our positions have been through the course of the week, and of course anticipate the second half of the week, which promises to be a volatile second half due to the economic event we are looking forward to, and of course the backlog of the events that has happened through the course of the week, which we are going to be looking at in conjunction with historical data on the chart to really have an insight into how market participants are behaving in anticipation of the second half. So I'm very excited to welcome you all. My own name is Sheriff Daramola, and for the next 30, 40, 50 minutes thereabout, I am going to be your host, as I will be taking you on a trading journey where we will be evaluating the financial market from both technical and fundamental perspectives, with the utmost intent of identifying practical trading setups that we can use to guide our decisions for today. So far this week, we have been monitoring three financial assets, which includes the USOILSPOT, which has done pretty well since the beginning of the week, as we saw price plunge, drop into the downside. And of course, on the GBPUSD, we really have not had something significant on that market. I remember the first, at the beginning of the week, we were buying the GBPUSD. We had a break-even situation, but yesterday we had a couple of losses on the GBPUSD. So we are looking forward to see how we are going to be recouping the losses we made, recovering from the losses, and of course make some more profit on top of it. So you do not want to miss out on this session on this particular asset, so stay tuned in if you are a GBPUSD fan. And of course, we are going to be looking at the XAUUSD, my favorite asset amongst them all. We've done pretty well on this asset. Yesterday, we had a loss on the XAUUSD due to some choppy market conditions. But if you are a scalper, you must have made some profit on that particular trade. We are going to be looking at that one too. So we have simple trading setups that we are going to be using to navigate the market today. So I encourage us all to stay tuned in, grab your favorite beverages, your biscuit, what have you, and ensure that you are part of this session. And for those of you who are joining us for the first time, I did not forget you guys. You are highly welcome on board. I'm very, very excited to have you around with us this morning. I know you will be wondering, what is the Forex Morning Mastery all about, and what is it that we do here every morning? Well, the Forex Morning Mastery is an idea that was born out of the necessity to do follow-up detail on the financial instruments I usually share during the course of the weekend. So we usually come here together 3 times in a week: Mondays, Wednesdays, and Fridays, coming together as a community to review how well our positions have been, and of course strategically position ourselves for the next move. And it's important for me to also state here that this is not a signal service platform, but instead an avenue where we all come together to have an educational understanding of the financial market through the lens of fundamental and price action based technical analysis, with the utmost intent of identifying trading opportunities. And my aim here is to, of course, give us this basic understanding, and be it you may be a scalper, day trader, position trader, or a swing trader, depending on what type of trader you are. We are here to understand which levels and zones that we can buy or sell this asset we are monitoring. And depending on the type of trader you are, you can design your trading approach according to this ideology. So trust me, the more time you spend with me here, the better you get to comprehend my analytical approach, which eventually will help you in making your own independent trading decisions. So once again, I welcome you on board and encourage you to actively engage in the comment section. And that reminds me, if you have found this content helpful and useful, kindly give the video a thumbs up. It goes a long way in helping the YouTube algorithm to promote the video to a wider audience of traders who may find this content beneficial. And another way you can actually support the channel is by dropping the hashtag Forex Money Mastery in the comment section. Let's hit the algorithm to push this video to a wider audience. So once again, I welcome you on board, and let's dive right into the business. So I see your comments. I see you, Tammy Klo. Good morning to you. Glad to have you around this morning. Hello, my namesake, Sheriff Abdul Kadiri. Good morning to you. It's been a long time since I saw you here. How are you doing today? Glad to have you around with us today. Please let us drop the hashtag Forex Money Mastery in the comment section. It helps the algorithm to promote the video to a wider audience of traders who may find the content beneficial to them too. So thank you very much, guys, as you continue to support this channel to grow. Thank you, Samuel. Thank you, Tamaklo. You guys are just great and wonderful. So with that being said, here we will be diving right into the business. And as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the market today, and of course for the remainder part of the week. I think my camera so am I moving here? I think I'm moving here, right, so that I stay within. Okay, so by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases on the economic calendar, of course, and technical patterns on the chart, giving us insights and, most importantly, timing to strategically position ourselves for the next move on the asset we are looking at. And based on the asset we're looking at for this week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. And since the week has begun, on Monday we do not have any high impactful events, so we included some mid-tier economic features. And for the sake of clarity, let's run through what has really happened during the course of the week and how they had influenced the sentiment in this market. Now on Monday we had speeches from Askell. Askell is a Bank of England policy maker. Is a member of the Monetary Policy Committee of the Bank of England. He had a speech on Monday, though I'm yet to have an highlight on that one. I googled all my financial website, but wasn't able to get a tangible information on what Askell said. But the BLC like-for-like retail sales data, which obviously gives us an insight into the retail sector of the United Kingdom, came in way below the market expectation, and in fact it came in below the previous month data, which came in at 0.4%. and this is not something that's impressive at all. Despite this whole situation, we've seen that the pound sterling is still struggling to gain some traction, though personally I still think that the path of least resistance for the pound sterling is to the upside. But we are going to be looking at how the market participants are digested this information in anticipation of their next move. Then yesterday, one of the major highlights from yesterday is the Fed chairman's speech. It's a testimonial, of course, in front of the US Congress. So we normally experience, I think it's once in a year thereabout. Hold on a second, I'm trying to. So it usually happens once in a year thereabout, where he presents his own view, or let me say the Federal Reserve's view on the economy and monetary policy before the US Congress. And this event significantly influences the sentiment in the market, as market participants tend to analyze the remarks of the Fed chairman for insight into future interest rate decisions, economic outlook, and of course the Federal Reserve policy direction. And usually these tend to increase market volatility as it shapes expectations regarding the Fed's action. Now, we are talking about an era where everyone has been, market participants are falling into two sides, where some are expecting that there will be an interest rate cut anytime soon, and some are even saying that we will likely see this higher interest rate extended for another quarter or so. But from the data coming in from the United States, the economic data are not quite impressive. From the labor sector to the consumer sentiment index, everything is not really looking rosy for the United States, which obviously has given the markets the insinuation that the monetary policy has been working, hereby causing an easing in inflation in the United States. And this has resulted in market participants expecting a rate cut anytime soon. In fact, the CME Watch tool, as at yesterday, projected a 79% in favor of the cutting of interest rate anytime soon. Now, everyone was looking forward to the Fed chairman's speech testimony yesterday, and from what he said, we can see that he really did acknowledge the fact that interest rate is easing, but he is still holding on to the idea that we need much more data to further confirm this before interest rate will be cut. So this, for me, is looking a little bit political in statement. So we're still looking forward to see what is likely going to happen. So the testimonial continues today, the second half of the testimonial, and of course market participants will be looking forward to that one. That's today, Wednesday, July 10. Now, today we have a handful of speeches from Fed officials besides that of the Fed chairman's testimony. We have Mann, we have Bowman, we have Goolsbee, we have Fed Cook too as well. So these are timings that we need to also be around the market to ensure that we mark out a structure ahead of this event, which will be giving us an insight into where price is likely going. Then another thing I would like to also emphasize here is the consumer price index, which is considered to be an inflationary gauge that measures and examines the average change in prices paid by consumers for goods and services in the last 30 days. Now, this is another event everyone will be looking forward to, and it has a tendency of influencing the sentiment in the market today. And how is that? Well, major key players in the market, due to the anticipation of the CPI, which will be giving us an insight into the level of inflation in the United States, may want to step aside from the market, waiting for the data to come in before making any decisions going forward. And this could lead to extended sideways trading activity today prior to that event. So if we have any positions we are taking today, we want to be around to ensure that we move all stop losses, securing the positions immediately, so that we do not get caught up in a situation where price rebounds and goes the other way around. So it is very important for us to take this into consideration while trading the market today. So these are the events we are looking forward to today. So I encourage us all to mark out the timing of this event so that we can be around to navigate the correct market structure. So what we are going to be doing now is to scale back into the chart, and let's look at things from a technical standpoint in anticipation of these major events. I see you, Wokocha Kingdom. Good morning to you. Glad to have you around. Thank you very much. All right, so with that being said, let's dive right into the business. And as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And on the USOILSPOT, since the beginning of the week, we have been selling this asset, scooping in some significant amount of profit, though we had our sell position taken out yesterday due to that volatile move during the Fed chairman testimonial during the New York session yesterday. So this volatility took us out of that position. But since we're using this descending trend line as a yardstick to guide our bearish bias, we were keen on selling more of the US OILSPOT as long as price action trades below that descending trend line. So we're doing very well on the US OILSPOT, but as at this moment all positions have been closed due to the recent bullish traction we noticed during the beginning of the London session. Now, for the sake of clarity, let's quickly run through what really happened at the beginning of the week and what led to the decisions we made. And I also want to emphasize that we will not be running the higher time frame due to the limited time we have. So I will only be deliberating on the 1 hour time frame, which is our execution time frame. However, if you are willing to have a background knowledge of how we got to this point, well, we did a top-down analysis on Monday's session during the Monday's Forex Morning Mastery session. So I encourage you to check out that video. The links are right in the description box of this current video, so you can check it out after the live session to have a deep understanding into what is going on here. So with that being said, let's dive right in. Now, at the beginning of the week, if you remember vividly, especially for those of you who have been with us, we had our key level situated at the $83 area, and of course this level had played a significant role in determining the direction of price action for about a month or so. And you know how we use our key levels. When price trades below the key level, we want to be looking out for patterns and structures that support the idea of selling the asset. Now, as at the beginning of the week, the first 6 to 7 hours of the week saw price action oscillate around that key level, giving us a range bound structure where price was confined within the $83.30 level and the $82.80 area to emphasize the prevailing uncertainty in the market at that point in time. And you know how we use our range bound structures in this community. When we have them, we exercise patience, wait for the negotiation to finalize between buyers and sellers, giving us a directional decision which will reflect on the chart as price breaking out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And as you will see, at no point in time did we see price break out of the resistance line, hereby negating any possibility of considering buying this asset. But instead, we saw price break down the structure. In fact, if you missed out on that opportunity, we saw the market came back to retest the structure, and since that moment, price action had continued to nosedive. And along the way, we were able to capitalize on multiple entries just to maximize the potential of the bearish move. So we had one at the $82.50 level. As you will see here, we added another one at the breakdown of the $82.10 level, which of course pushed price into the lowest point this week at the $80.90 level. So this is a typographical error here, so let me quickly adjust this quickly. So we saw price drop into the $80.90 level, which is the support level for this week. That's the lowest point price action has gotten to for this week. And for those of us who capitalize on this bearish opportunity, well done and kudos to you. Now, during my commentary yesterday as regards to how we will be navigating the current market dynamic on the US OILSPOT market, I updated the structure with a descending trend line after noticing the consistent and uniform series of lower highs and lower lows. Now, after connecting the series of lower highs here, we have this descending trend line, and you know how we use our descending trend line. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of selling. Now, in this kind of scenario, the only condition that will make us buy the asset is if the descending trend line is breached and broken to the upside. So as you will see, price still remains below the descending trend line. Now, with the situation we have right now, we are not in any position on the USOILSPOT right now. How do we intend to navigate this current market dynamics today? Are we going to continue selling the USOILSPOT today, or are there chances that buyers will take over this market? Now, for us to have, before we go into the technical details, it's important that we also have a deep insight into what is going on behind the scenes. And in fact, there are various factors that has been influencing the sentiment in this market, one of which is the API report which came in yesterday. Now, from what we saw from the API report, we saw a second consecutive week of decline in the US weekly crude oil stock. And from what we saw that there was a drawdown of 1.9 million barrels, surpassing last week's sharp decline of 9.16 million barrels. Now, it was way beyond the market expectations, as you will see, and it's important for us to also understand the implication of this drawdown in the market. Now, when we say drawdown, that simply means that the stock was depleted due to increased demand of this commodity. So what this simply means from an economical perspective is that the demand is much more than the supply in the market. So they had to go into the stockpile to be able to feed the demand in the market. So what this simply means is that there is an increase in demand last week, which could push price higher this week. So for me, based on this information, I'm beginning to consider the potentials that buyers could take over this market. So we are going to be looking at how we will do that in a moment. So let's talk about the other factor which is influencing the sentiment in the market, and that is the tropical storm Beryl, which was a concern during the weekend. Majority were thinking that this could affect oil production in the United States, but on Monday and Tuesday, these fears were allayed, and everyone was quite sure that this was not something that was too significant, as oil production still continues. So this further as may cap the uptrend possibility in this market and push price to the downside. Then other factor here is the geopolitical tensions in the Middle East, and of course the Russian-Ukraine war, where we saw Ukrainians continue to eat Russian oil refineries, affecting the production of oil from Russia, and of course the Middle East tension, where Israel and Hezbollah are tugging things out. But we're beginning to hear that there is likely going to be a deal for resolution, which is still on the table. We don't know how that is going to go out, but from the look of things and based on the data we got from the API report yesterday, I think that we may likely see an uptrend scenario. Now, how do we intend to navigate the structure, and how are the market participants digesting this contrasting information? Now, looking at things from a technical standpoint, we are at a crucial juncture in this market where price action is back within that descending trend line. Now, the question at this juncture is, will price action break out of that descending trend line, or are we going to be seeing a situation where the trend line will be respected, hereby pushing price to continue the downtrend? Now, with the situation we have here, what we are going to be doing now is to mark out a structure around that trend line that will be helping us navigate the current market dynamics. Now, if I bring out my line chart and look at the structure here, you will see that we have somewhere around the $87.75 area, a level which has been respected in the last 24 hours. Now, look at what has been, let me label it first of all. So we have the $81.75 area. So let me just mark this one out right now, and let's see. So we have the $81.75 level. I also encourage you to also mark that one out on your chart immediately. Now look at what has been going on here in the last 24 hours. We see buying niche around this area. We saw a buying niche around this area. Then following the Fed's testimony before the Congress, we saw price break down the structure, and since yesterday price had maintained its momentum below that structure. Now price is back into that structure, which interestingly shares a beautiful confluence with that descending trend line. So you would agree with me that we are at a crucial juncture at this point in time. Now what are we looking out for? Is price going to break out of the structure to give us an opportunity to join an uptrend continuation, since the trend line has been breached, and this will be a signal that the trend line may no longer be strong enough to negate the bullish attempt? Or are we going to see continued selling pressure around this area, which could evolve into a reversal setup like a double top, head and shoulder pattern, or even a rising wedge to incite a sell-off to the downside? So if we see a reversal pattern here, we are going to be marking out the neckline of that structure. Then we join the decline to the downside. But if price breaks out of the $81.75 level, retest of structure will be a good confirmation to continue the uptrend move. So what we are doing right now is to exercise patience and wait to see how the market is going to be reacting to this important confluence we just identified here. Now, for those of you, I know there will be this question of how we're going to be placing a buy stop order right away, or are we going to be waiting for a retest of structure to happen before we jump into the buy position? Well, that's a very good question. For those of you who have been with me for a while, you know how we navigate this kind of situation. But for those of us who are new with us, let me quickly explain to you. Now, for those of us who have been part of this profitable journey so far this week, we can afford to place a buy stop order above the $81.75 area due to the fact that we have something to leverage on. We are in profit already on our USOILSPOT portfolio. So if we place a buy stop order, we can test and see if that move is going to work. And if it doesn't work, we know that we are only risking some of the profit we have made so far this week. So it's good for those of us who are part of the profitable journey so far to place a buy stop order above that structure. However, if you are new with us and you are yet to take any position on the USOILSPOT, that means you do not have anything to leverage on. I will encourage you to exercise patience and wait for price to break out of structure, come back to retest of structure, giving us a confirmation. Usually we look out for these on a lower time frame, like the 5, 10 or 15 minutes time frame, to continue the uptrend scenario. Now, if price continues to climb and find new highs, we have multiple levels that we are going to be using to maximize the potential of this bullish move. So we have the $82.10 level. We are going to be adding positions there. We have the $82.35 area. We will be adding more positions at that point in time. So personally, I have a buy stop order on all of these levels you're seeing here, as we will be intending to maximizing the potential of this bullish move. So let's see how the market will play out around this important confluence. But if the opposite happens here, and instead we see price find selling pressure below the structure, continuous selling pressure evolving into a double top structure, let me say for instance, the breakdown of the neckline will be all we need to continue the downtrend move. And if price continues to drop, we will be adding more sell positions at the breakdown of the $80.90 level. So this is how we are going to be navigating the current market dynamic for today. So I encourage us all to mark out these levels and structures on your chart right now, as you will be needing them as a reference point to guide your independent trading decisions. And if you have any questions whatsoever, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. So you can use that time as well to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So in the absence of no questions, I want to assume that we are all on the same page. So in that regard, we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is the GBPUSD, that is the pound sterling against the US dollar. And in fact, we have a very beautiful and simple trading setup gradually evolving on this chart. And like I did tell you earlier, I still strongly have a this belief that the path of least resistance for the pound sterling is still looking to the upside due to the couple of structures we have on this chart. Now, before I go in, I want to emphasize that this we are going to be deliberating on the 1 hour time frame, our execution time frame. We already done a top-down analysis on this asset at the beginning of the week. So if you want to have a deep insight into how we navigated the structure from the higher time frame right down into the lower time frame, you can check the link in the description box below for this insight. So back into structure. Now, there are a lot of factors behind the scenes that has been influencing the sentiment in this market, and one of which is the political stability as a result of the United Kingdom's Keir Starmer-led Labour Party's victory, providing political stability, as majority of the citizens in the United Kingdom have been looking forward to the taking over of the Conservative Party. Now, with this situation here, I think there's a lot of hope in the United Kingdom economical landscape at this point in time. Then another factor that could also be influencing the sentiment in this market is the rate cut expectation, as there is a strong speculation that the Fed will start reducing interest rates during September's meeting. And also yesterday, we also witnessed the Fed Chair semi-annual congressional testimony, which did not really specify a rate cut path, but acknowledged the cooling state of the labor sector in the United States, which is for me a sign that which is a little bit looking dovish to me, a sign that the possibility of a rate cut is very likely anytime soon. But Powell went on to note that the US economy is no longer overheated, that's his own word, with moderated labor market conditions, increasing rate cut expectation. And for me, this is not looking very rosy for the United States, and I think that the pound sterling may likely take advantage of this shortcoming to push the value to the upside. Then another factor that will be influencing the sentiment of this market this week is the upcoming US CPI report, which is coming up tomorrow, and there is this expectation that inflation may likely grow by 0.2% on a monthly basis and 3.4% on an annually basis. Now, the headlines, if there is an increase in inflation more than market expectation, this could likely favor the US dollar, but I doubt if that will happen. But if it does happen, it could favor the US dollar. But everyone is thinking that inflation is gradually thinning out in the United States, hereby favoring the pound sterling in that regard. Now, if we look at the United Kingdom's perspective, the rate cut part is still very uncertain right now, but we had an hawkish comment from the Bank of England policymaker, which says that that an August rate cut, despite market expectation, is very likely, but it's not cast in stone at this point in time. And of course, another data that could be influencing the sentiment in this market is the upcoming UK data, where investors are expecting that the United Kingdom economy would expand by 0.2% for the month of April. So if we look at all of this together, I think after market participants digest this information, we may likely see the pound sterling increase in value. Now, if we look at things from a technical standpoint, remember, please, I will encourage us all to watch my top-down analysis on the GBPUSD I did on Monday to have an insight into the background knowledge here. But on Monday, on the 1 hour time frame here, we did acknowledge the fact that since the last trading week of the month of June, price had uniformly found higher highs and higher lows, and of course we were able to take advantage of that opportunity. And as a result of this, after connecting the series of higher lows, we have a couple of ascending trend line to work with, though this trend line here that I just highlighted was broken at the beginning of the week, and it's dropped into the second ascending trend line, which is going to be playing a major role in guiding our decisions for today and in fact for the second half of this week. Now, if you look at what has happened since price tested that trend line, since the New York session, later part of the New York session yesterday, you will see how it has been difficult for sellers to continue that downtrend move. Remember, we sold the GBPUSD right here yesterday, and I hope you moved your stop losses accordingly to secure position, as if you don't so, you must have been taken out of this position right now. Now, ever since price action came back into the trend line, we have continued to see buy pressure resume from that area, and in fact you will see multiple hammer candles from this area, which is a sign from a theoretical standpoint that buyers are still present in this particular market. And with the situation we have in right now, I reiterate, the path of least resistance for the pound sterling is looking very, very bullish. Now that we factor this out, how do we join this bullish momentum? Well, first of all, we have a psychological level at the 1.2800 area, a level which, if you look at this closely, since the beginning of this week, it has played a significant role in determining the direction of price action. In fact, most of the first day of this week, it was more of a buying niche, a very robust demand zone, as you will see here. And not until yesterday we saw the level broken to the downside, and the inability of sellers to break down this ascending trend line could incite buying opportunities above the 1.2800 area, considering the bullish nature of that area and of course the memory for buying power along this level. So above the 1.2800 levels, looking very promising for me. I had my buy position triggered at this point in time, and if you had missed out on that position, just wait for exercise patience and let's see if the market will come back to retest the structure. And if it does come back, we want to be willing to join a reversal setup to continue the uptrend scenario. Now we tend to look out for more buying opportunities. I'm looking out for more at the breakout of the 1.28150 level. Let's add more positions right there, and if price action continues to climb, breaking out of the 1.28415, this is the highest point price action has gotten to for this week, we are going to be adding more buy positions to those levels. So we have buy stops order intact at those levels to capitalize on the uptrend move. Now for those considering selling the GBPUSD, based on what we are seeing right now, it's not looking promising at all to consider selling the GBPUSD, except if the price breaks down and retests this ascending trend line we have here. If this does not happen, there is no point considering selling the GBP USD today. So this trend line here is going to be playing a significant role in guiding our decisions today. So as long as price remains above this trend line, we are going to maintain a bullish bias on the GBP USD. So this is my simple setup on the GBP USD for today. Let's see how this is going to play out, and of course I will be giving us updates as at when due on both my TradingView and Telegram platform. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the final asset on our watch list for today. And please use that time to also mark out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. See you in about 10-15 seconds from now. Cheers. All right. So in the absence of no questions, I want to take this as a confirmation that we are all on the same page. So in that regard, let's move right into the final asset on our watch list for today. And don't forget to give the video a thumbs up. Your likes are very, very valuable to me, and in fact it also plays a role in the YouTube algorithm process, hereby pushing the video to a wider audience of traders who may find the content beneficial. And besides that, it also serves as a sense of inspiration for me to continue to bring in this valuable content to you guys on a daily basis. So please click on that like button, and thank you very, very much as you do so. So with that being said, let's move out right into the final assets on our watch list. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot, and we're doing pretty well since the beginning of this week. As speculation mounts on the fact that the US Federal Reserve is likely going to start cutting interest rate, we begin to see some rebound, especially during the Asian session today. And yesterday we also saw some buy position triggered yesterday. Unfortunately, it didn't do very well at all. We got stopped out in a loss on that one, but later again we had our re-entry in place, and finally price is doing pretty well. Now let's go back to what happened at the first on the first trading day. Remember, we were selling the USOILSPOT at the beginning of the week after identifying a range bound structure where price action was initially confined within the 2391 level right here and the 2381 area. And of course we saw that the week started on a bearish note, which for me was the beginning of a retracement of that impulsive leg that we witnessed last week. And it was a question of how far will that bearish momentum go. And if you remember vividly, I told us on Monday that I will be having my TP target for the sell position around the 2350 area, and that if this level gets broken and retested, we will be looking out for more selling opportunity. Unfortunately, price did not get that far. As you will see here, it stopped around the 2351 ish area before it climbed back up. And of course, I can remember telling us all to move all our stop losses accordingly to secure the sell position. So we had a couple of sell positions on Monday. Okay, I think 3 positions we had. We had the first one right here at the 2381 level. We added another one at the breakdown of the 2377, and then we added, okay, we didn't had here, I think we had only 2 positions. Yes, we only had 2 positions, the 2377 and the 2381 area. And for those who took advantage of this opportunity, well done to you. Now yesterday we had a new trading setup to navigate the current market dynamic, which we have right here. And after observing how price action reacted to this above the 2350, a zone which shares a confluence with a newly identified ascending trend line. Look at this. So since last week Wednesday, we noticed how price action had consistently and uniformly found higher lows. Now when we connected the higher lows together, we have an ascending trend line to work with. And as long as price remains above the ascending trend line, it makes a lot of sense for us to always consider buying that asset. And with that situation in mind and price action coming into this area on Monday, we were keen on joining an uptrend move. And the question was, where will be most precise for us to join that uptrend scenario? And as a result of this, we were able to identify a level at the 2,365 area, where I said we will be buying the XAUUSD. We had a buy stop order right there. We had the position triggered during the I think prior to the Fed testimonial before the US Congress yesterday, and I think his initial remarks caused some volatility in the market. We were taken out of that position in a loss yesterday, but we remained faithful with our analytical approach, replacing our buy stop order above the 2,365, and it got triggered this morning. And as you will see, price action had moved about how many pips now? It has moved about 85 pips in our favor. Then the other buy position at the $2,373 area has also been triggered, but it's still running around break even at this point in time. So at this point, since we have about 85 pips in profit on the XAUUSD, I'm encouraging us all to move all stop losses and let's secure this position while we continue to monitor price action around the $2,373 zone. So if you would ask me, the most appropriate area right now is around the 2,368 area. Remember, we do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, it is important for us to also keep tabs with what are the various drivers behind the scenes that are influencing the sentiment in this market. First of all, it's important to note that the US Treasury bond yield is currently consolidating, is still struggling alongside with the US dollar. We know how the US Treasury bond yield is directly proportional in value to the US dollar. And if the US Treasury bond yield is doing very well, we expect the US dollar to do very well. And if it is not doing well, we expect the US dollar to follow suit. And indirectly, this affects the gold prices as well. So as a result, I think the path of least resistance for gold is still looking very bullish. And if we also consider this speech, the comment from the Fed chairman yesterday, which is looking a little bit dovish for me, we'll still continue to maintain a bullish bias at this point. Then another thing that's also going to be influencing the sentiment in this market is the CPI data coming up tomorrow. Of course, we want to see how inflation is doing in the last 30 days in the United States, which will definitely be influencing the interest rate decisions by the Federal Reserve. Then another thing I would like to call our attention to is the gold holdings by the Central Bank of China. Now, from the report we got on Sunday, it shows that China did not buy gold in the month of June. So it's been 2 months in a row now that China has stopped buying gold. Remember, prior to the month of April, China has been buying gold for 18 consecutive months, and this helped in escalating the prices of gold. Now, the fact that China did not buy for the last 2 months could send some shiver into the market, causing some fear and making people start taking some profits off the chart. So we need to take this into consideration as well. And if we see any signs that sellers may take over the market anytime soon, through technical structures we are going to be looking at in a moment, we will not be holding back in joining that bearish move. Then another factor behind the scenes, which is the geopolitical tensions in the Middle East at the moment. And we all know how this kind of tension usually increases the appeal for safe haven assets such as the gold. So for me, I still consider the path of least resistance still very bullish for the XAUUSD. And in fact, I have multiple levels in place to continue to maximize the potential of the bullish move. So this is the support line of the range bound structure we identified at the beginning of the week, the 2,381. If price breaks above, we want to be adding more buy position, and if price goes on to break out of the 2,391 level, we will be adding more buy positions to our existing trade. Now, another thing that makes me feel comfortable continue buying the XAUUSD is this technical structure you will see here. So the last time price tested this trend line last week was on Tuesday. We saw this impulsive move all the way to the upside, and we saw price retrace back into the trend line, and then we have something that looks like a reversal pattern in the form of a double bottom structure. And with this situation we have here, we have the neckline around this area which has been broken already, which further gives much importance to the uptrend continuation at this point. So these are the big major things here that is helping me in supporting this bullish bias. Please hold on, let me attend to my little boy here. I will be right back in a moment. All right. All right, I'm very sorry for that break in transmission. If I didn't do that, it will continue to disturb me, so please bear with me on that one. So where were we? So I was talking about the potential of the uptrend scenario, and all roads still leads to the upside on this one. Though it may take a while, we may see a little bit of extended sideways trading activity before this momentum happens, due to the fact that major key players may want to step aside, waiting for the CPI, PPI data later in the week before making aggressive bets in this market. So when we are in a position like this, we ensure that we move our stop losses, secure the positions, and let's ensure that we are in place to capitalize on much more opportunity to the upside. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could also come into play. And if sellers come in, what are the conditions that will make us feel comfortable selling this asset? Now, from a long-term perspective, selling make a lot of sense if price action breaks down our weekly key level at the $2,350 area. However, if we look at the distance between this key level and this ascending trend line, we are looking at over 150 pips move. Now, so that we do not miss out on that gap, I think that we could have a sell position triggered even before the breakdown of this support line happens. Now, the only condition that will make me sell is for me to see price break down this ascending trend line we have here, which will be the first time price will be breaking down that ascending trend line in a week. Now, we're not only going to look out for a breakdown, so that means we're not having a sell stop order, but instead we want to wait for confirmations to happen, like a breakdown, then retest of structure. We look out for this on a lower time frame, like 5 minutes time frame. Retest of structure giving us confirmation that buyers are finding it difficult to climb back above the ascending trend line. Then we can join a bearish move, after which we have a sell stop order below the 2,350, adding more sell positions to our existing trade. So that is the only condition at this point in time that will make me start considering selling the XAUUSD. But if that does not happen, as long as price still remains above the ascending trend line, let's ensure our bullish bias is still very intact. So this is my simple view on the XAUUSD for today. I hope I made myself very, very clear. But if you have any questions or anything as regards to the financial market, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. And that reminds me, we are going to be running the Forex Morning, we're going to be running the XAUUSD live window later today, so you want to be part of that session where we are going to be monitoring real-time price action on the XAUUSD during the New York session. There is a likelihood that we could see some volatility. We don't know what the Fed chairman is going to be saying today, so we look forward to that one. And for those of you who are joining us for the first time, you will find the link immediately at the end of this live stream. So once the live stream ends, you will see the link. Click on the link, click on the notify me button so you can get notified as soon as we come on live. So this is my simple view on the XAUUSD. Let's see if we have any questions before we start rounding off on today's Forex Morning Mastery. All right. So in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys as always. Thank you very much for your support in the comment section. I see you all from Richard Blackett, Wokocha, Sheriff Abdukadiri, who else is here again? Tameklo, Samuel. All of you guys are wonderful. I really appreciate your support. Though we had more people than the likes we have, please let's make the like tally with the number of people on board at least, and thank you very much as you do so. So today we were able to take on all the three financial assets on our watch list, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD. And we were able to identify simple trading setups that we are going to be using to navigate the current market dynamics today. And I do hope you are able to mark out these levels on your chart, as we definitely going to be needing them to as a yardstick to guide our decisions. And if you have done that, well done to you. So all we need to do right now is exercise patience and wait for the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, please let's have a well-defined risk management strategy in place. And for those of you who joined us for the first time today, I hope you are able to gain one or two things from what we discussed here. Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing more of you same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for the last trading day of the week, which usually comes with a high level of volatility due to the rounding off of trading activities by market participants ahead of the weekend. So looking forward to seeing you then. So I wish us all the best of luck today. As always, trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.